Hey there. Welcome back, everybody. Good to be here. Ed Ponsi here, your FX educator here on behalf of FX Street. Once again, good to be back. And we're back in the Forex chat room. Feel free if you do have any questions, comments, etc. Just type them in the box and press enter. Doesn't matter. Could be the chat box, the Q&A box. Doesn't matter. It's either one is fine. We have both boxes going all the time. And just taking a peek at Euro here. Euro's still on the move, still right around, hanging around that 118.50 right now that we've been talking about for a while. That dotted line on the chart seems to be an area of focus right now. We've been stuck here for a little bit, popped above it for a little while. Now we're still there. This is an area that we expected Euro to have a little bit of difficulty getting through. We said yesterday, or well, actually a couple days earlier this week, that the Euro had a lot of resistance in this area back in August and September. And due to that resistance should act as support now. And so we're having trouble getting through there. Big good morning from Carlos, who's obviously happy that the Yankees won last night, advancing to the next round against the Houston Astros. And I'm very happy because my voice is back, right? Maybe a tad lower than before, but I've got my voice back. So everybody's happy. Okay, so yeah, I think I've got my cold. The worst of my cold is behind me here. So everything's as the week heads toward the end here, everything's looking a little bit brighter for everybody here. Let's see. So anyway, right now would look like an interesting time to sell short, in my opinion, for several reasons. One is because of the aforementioned resistance here, because due to the earlier support should now act as resistance. Another one is because we've already tried to penetrate that and kind of failed here. We've got the that wick up here, right, is telling us that we kind of tried and we've been pushed back. Just like these wicks down here show that we tried to make it through and we were pushed back. That's sort of what I'm seeing right now, is that we went through 118.50 and we're being pushed back right now. So that's where we stand right now. We're just sitting right at 118.50. It looks like an interesting place to short it, in my opinion. So anyway, I've got my eye on that one. Still a little bit irritated that I called this as a long a few days ago and yet I missed it right here in the room. That's a bit irritating. What are you going to do? But now would be a perfect time to cover that long, had I taken it. All right, let's get to the next. Of course, I was avoiding Euro because of all that drama. Look at the big drop on British pound. Pound really taking it hard this morning. And of course, you know, again, another one, we've been staying away from the pound a little bit because of a little bit too much drama out there. And again, it's due to Brexit and all these issues surrounding it. And today, it's the Brexit talks. And these are the remarks from the press conference today appears to have been what set this off. The Dave Davis is the British Brexit secretary. They actually have a Brexit secretary over there. And then there's his counterpart. I believe it's his counterpart from the EU. His name's Barnier. And at any rate, apparently the talks did not go well today, and you can see that on the chart. And this is pound USD, and you can see this candle basically engulfs several candles, and the British pound is taking it hard. Euro pound, huge green candle here. So just pulling up. You know, these talks are still deadlocked. Barnier calls the UK stance disturbing. I mean, these talks are not going well, okay? Barnier is the EU representative. By the way, Davis is the UK representative. Barnier says no concessions are going to be made in phase one of the talks. He says the EU is very disturbed by the UK's refusal to pay the bill. Right? And you know, it's just not going terribly well. But that's what a negotiation is, right? That's what a negotiation is. So today, I guess the reason, so why is the pound taking it so hard? It's earlier this week, some British officials sort of hinted that they were close to reaching an agreement on rights of EU citizens living in the UK and vice versa. And now, like this free movement issue, this cross-border issue, some UK officials hinted that they were close to an agreement, and apparently they're nowhere near an agreement. But they're very, very far apart on the money. When Barnier says it's a disturbing UK stance, the UK stance is basically this. EU comes out and says 100 million, right? And the EU comes back and says, how about nothing? And that's what they mean by disturbing. Okay. So now you know. All right, that's just the tip of the iceberg, obviously. That's the very surface, you know, obviously. Anyway, we've been a little bit more interested in things like Aussie USD. And let's take a peek here. It's endlessly fascinating, though, is it not? Here's Aussie USD coming up and reaching the moving average. And we've got to stick with this one for a minute here. 78.13 was the moving average, 78.13. Okay, but actually, right, it says 78.13.7. So round it out, 78.14. And then you're going to throw your ATR in there. ATR is quite a bit low. ATR is only 54 pips a day. Aussie, man, where has all the volatility gone from Aussie? Only 54 pips a day means 27 pips stop. So 14 plus 27, let's see, 41, right? The stop goes at 41. And the high of the day, 35. Just missed, right? Did I calculate that correctly? Let's see. Again, the moving average, 74, 78, 14. The ATR, 54. Half of 54 is 27. Right, so 27 plus 14.
The answer is 41.
Okay, so the stop is 78.41. So you say, okay, what was the high of that candle? So the high, that's important because that means, was I stopped out? Yet, the answer is no. The high of the candle is 78.35. That means it missed the stop by 6 pips. So as of this point, you see that big ugly wick coming through and you're thinking, oh my gosh, we were stopped out. No, it missed the stop by 6 pips. No, half of 54. Half of 54 is 27. And then 27 plus 14 is 41. Okay. Can we look for the 20 EMA now? We could, but we're not stopped out yet. But doesn't it look like it? I mean, you would think, just visually looking at that, it sure looks like you'd be stopped out, but you're not. It misses by 6 pips. It's awfully, you still could get stopped out. But as of right now, the entry is 78.14 and the price is 78.11, so you're actually up 3 pips. But that's one of those trades where you enter on the moving average and it just keeps coming up and you're thinking, oh, I'm going to get stopped out. Now, if you're overthinking it, here's what happens, right? You're overthinking it and you decide, well, I'm going to get out of this trade before I get stopped out. And you bail out on the trade, and guess what? You just bailed out of maybe a big winner. Who knows? Because we didn't get stopped out. And if you bailed out on that, then you outsmarted yourself, and you'd have been better off if you hadn't even been in front of the computer, right? If you had just walked away and hadn't even turned on the computer, you'd have been better off. Isn't that funny how that works, right? But it's true. Right? Sometimes we're better off just walking away and not even knowing. All right. So far, so good on Aussie USD. New Zealand USD just came up and maybe just kissed it. Let's take a peek. Moving average is 71.25. High of the day, 71.23.9. So according to this, it missed it by 1 pip. Entry did not occur on New Zealand USD. One more is dollar CAD. Dollar CAD looks like we came through and probably stopped out if we entered on this one. Let's do the math on this. Yesterday, entry 124.81 with an ATR of 80. Well, yesterday's ATR was 83, 83.6. So half of yesterday's ATR was 42. Again, 124.81. The ATR is 84, so half of that is 42. 81 minus 42.
The answer is 39.
Okay, so the stop is at 39. The low yesterday is 51, but the low today is 32, so you weren't stopped out yesterday, but you were stopped out today if you entered yesterday on dollar CAD. So can't win them all, and there's proof, right? This doesn't work every time. So bound to happen sooner or later, right, gang? Yeah, well, listen, the losses are capped and the gains are not capped, and that's a good thing, right? Because we've had some big winners on this strategy this year, but we'll never have big losers, right? Because we always cap the losses, and that's what makes any strategy good, effective. Okay. So back to Aussie, right? We could still get stopped out on Aussie. We really don't know what happens next. We're hoping for some dollar strength here. And we're going to get some statistics in about 10 minutes that will either give us weakness or strength. Take a look at the long list of statistics that are going to hit in 11 minutes. The popular weekly jobless claims figure expected at 251. Producer prices, we're looking for a monthly jump to 0.4. That's month over month. 2.5 year over year. The core rate, taking out food and energy, should be 0.2 month over month, 2% year over year. And so those are your figures. Now, so I'm long the dollar. What do I want to see? I want to see higher than expected. Now, the expectations are already pretty high, so that's kind of working against me there, right? I need to see 0.5 on the monthly. That's asking a lot, right? And jobless claims, naturally, we want to see better than 251. Of course, that's just a short-term reaction, most likely, to these figures. It's probably not going to be a huge reaction. The reaction to these figures tends to be pretty muted. Even the reaction to non-farm payrolls isn't what it used to be. It used to be really wild. Like, I can remember people at FXCM a long time ago. FXCM was a brokerage in the U.S., for those who don't remember. FXCM, I remember people sleeping in cots in the hallways on non-farm payroll Friday. And because there was so much activity and there were so many phone calls and so much stuff going on. And now it's like a 40 pip move, you know. Basically, that's what happened on Friday. It was like a 40 or 50 pip move. It wasn't that big of a deal, right? It used to be a 200, 300 pip move. So I'm not expecting a huge move here, but I'm just hoping for a move that pushes it away from my stop. What do we not want to see? We do not want to see 0.2, 0.1 on PPI, right? We do not want to see jobless claims at 270 or 280. We'd rather see them at 240. But rooting for one number or another is meaningless. The number is what it is. It will be what it will be. Later on today, we're going to get speeches from several FOMC members because, of course, we will. We always do, right? These people never stop giving speeches, right? And then we're going to get Draghi later on today. That's a little bit of a surprise. Didn't realize we were getting Draghi today, in just 2 hours from now. So keep your eye open for that one. Got some crude oil inventories coming up in 2.5 hours. That's always fun. Sometimes you can create short-term trades on Canadian dollar, dollar CAD, right, with the loonie, which tends to run opposite of crude oil. This is just a volatility creator, nothing more. The crude oil inventories. And that's pretty much it for what's coming up short term over the next few hours. It could be a little bit bumpy, starting in about 6 minutes from now. Very interesting little set of circumstances coming up. As far as what we missed earlier today, not a whole lot. Some CPI out of a few countries. Industrial production out of Europe was probably the biggest thing. Industrial production out of Europe stronger overall, and that's a good thing. Did we miss some German industrial production numbers? Let's take a peek. I don't see the German numbers on here. I think they came out earlier this week. Yeah, they were strong. They came out earlier this week. I remember now. So, Germany, when it comes to industrial production, definitely a big deal. Okay, so anyway, we've just got a few more minutes to wait for our U.S. figures, and that could have a big impact on our U.S. pairs, including Aussie USD. Support area on Euro is also the 23.6 daily Fibo. And the 114.20, the 38.2. Interesting. It's going back to the Euro chart here. And Euro is still hanging around 118.50. We'll see if that changes. Now, there's a lot of places I could draw a Fibo from here, right? I mean, this would be a Fibonacci trader's dream, because you could draw from here, and I can see exactly what you're talking about. There's your 114.20, there's your 38.2, right there, right? Let's add the 23.6 in, and there it is. Exactly. Right on the mark, right on the button. The 23.6 is the support level. Of course, depending on how you draw the fib, exactly. But look at that. Isn't that funny how the first one I drew matches your numbers exactly. So funny how that works, right? But yeah, we could draw numerous fibs on here. And the whole point of drawing numerous fibs is to look for coincidental Fibonacci lines, which is you know, I knew a trader who would only trade if he could find like 3 coincidental lines. You know, that's otherwise he wouldn't take the trade. And so he'd sit there all day, all day. He'd sit there drawing lines, drawing lines. And I said, "Man, you don't place very many trades, do you?" And he said, "No, I don't. But but I also look at my P&L, and I looked at his P&L, and his P&L was outstanding. His profit and loss statement, you know. And point of the story being that you don't have to place a lot of trades to be a very good trader. So and all he used Fibonacci exclusively. You know, he was a guy I was on a trading desk with in New York, named Mike, and he was from Beirut. Mike, his real name wasn't Mike. We just called him Mike because we couldn't pronounce his name. And he was a fantastic Fibonacci trader. Carlos says, "Good for me. I was using your parameters on how to use fib levels." How about that, right? How about that? And it's, look at that, lines up perfectly. But it's amazing, though, isn't that? That is kind of amazing. But you know, it's interesting. Yeah. So what would Mike do? He would be drawing, you know, from here and from here and from here. So he might draw one from here to the same peak, and he would be looking for coincidental levels. Now you can see here, these don't coincide. But then he might match it to here, and then to here, and he would just be looking for coincidence, right? He would be looking for levels that coincide. And I think if you draw enough, you're going to find levels that coincide, right? If you keep doing it, you're just going to find them. Yeah, yeah, exactly. That's a good way to put it, right? It's all right. Here come the numbers. So we'll sit here with this as they start hitting. Spin, spin. Here they come. This is the exciting part. Oops. And the calendar is, here we go. 243 on jobless claims, better than expected, and continuing with jobless claims, also better than expected. We've got some Canadian housing numbers coming too. Housing price index less than expected in Canada. I'm not really worried about that since I'm not trading Canadian dollar, but you know, it's worth mentioning for those of you who are. Still waiting for the PPI figures here, producer price figures, but the jobless claims number was a little bit stronger than expected. I'm going to jump over to the 5-minute over here on Euro. And you can see the Euro got a little bit weaker. Dollar got a little bit stronger on that. Dropped to 118.45 temporarily. And we're just kind of hanging there here as we wait for more information. 2.6 year-over-year PPI. That's a little bit hotter than expected on the year-over-year producer price index. That is not core PPI. That's regular PPI. Year-over-year, 2.6. 0.4 month-over-month PPI. That's in line with expectations. Core year-over-year, 2.2. Again, that's a little bit higher than expected. All right. And just waiting for the core month-over-month figure to 0.4. Core hotter than expected. That is without food or energy. that could create a little bit of a reaction. So far, nothing. But so the only things of note here were jobless claims were a little bit stronger than expected, and core food and energy inflation rate higher than expected, considerably higher than expected. So maybe that inflation that Fed always sees coming down the road, maybe there's a little hint of it right there. All right, gang. Okay, I'm out of here, but I'll be back in 30 minutes and we'll do it again. My name is Ed Ponsi. Thank you for listening. I'll see you back here in 30 minutes. Thank you for listening.